Hello everyone, welcome back to my YouTube channel and I hope all of you are doing great. So in today's video, I'll explain how you can identify stocks for trading by simplifying your screening process. So few days ago, I posted this on Twitter that where I explained how you can simplify your screening process. So many people asked me that I should make a video as well because some parts of it were difficult to understand and I should show how using these steps we can simplify the screening process, right? So today in this video I'll be doing just that, and we'll be going through the whole process and I'll show you how you can simplify the simplify the screening process and find the stocks. Okay, so the first point here was start with the sectors, right? So as a swing trader, your focus should always be on the strongest stocks, and more often than not, strongest stocks belong to a strong sector. So how do you find a strong sector? And there's another data point as well that more than 60% of the moves, like the stocks give, belong to the sectoral moves. Like if the whole sector is strong, so the weakest stock in that sector will also perform as compared to a strongest stock in a weak sector. So sectoral strength is really important. So we'll use a simple tool by Tijori Finance that is called the Market Monitor. How you can find this? Just simply search Market Monitor and you'll get the first link. This just go to this link and here you'll find the Market Monitor, right? So I'll just simply explain what the Market Monitor is. First, you will get the headline indices, how the our major indices have been performing over the period of 1 day, 1 week, 1 month, 3 month, and there are more available, but these are locked as for a free member, right? So plus we get another data point key, where is the last trading price versus the its previous 52-week high, right? And if you come down, then you'll see that you will get sectors, different sectors. Almost all the sectors are here with the stocks and their performance over the 1 day, 1 week, 1 month, and 3 months, and their last trading price as compared to their 52-week high. So here are two options. One is capital weighted and one is equi weighted, right? So capital weighted simply means it will focus on the it will just give you the names of those sectors with the highest capital overall market cap, and like versus equi weighted means it will give the equal weightage to the all the stocks, right? So we'll focus on equi weighted. Okay, and then we'll go through, first we'll go through the 1 month performance. You can use the ascending or the descending, right? So as a swing trader, your focus should be on the strongest stocks, right? So we start with the uh, descending first, right? So the stocks that have given the highest percentage of returns in last 1 month will be on the top. So here you can clearly see the fertilizer sector gave the highest returns over last 1 month and last 1 week as well. And here you will just click on this plus sign and here you will get all the stocks belonging to that particular sector. After that, what you can do is you can just simply go to your trading view. There you can simply search for these stocks one by one. That is a lengthy process. I know that is a kind of a lengthy process, but it gives you a rough idea how the overall sector is performing. Like if we just look at the one name from the overall sector, so RCF, right? So again, it gave a really wonderful move on Thursday, and then there was a small pullback that was expected on Friday, right? So again, you can clearly see how the stock behaved here. There was a small gap up, although the candle was not that good, and many people might have missed it because of this particular candle, because it was kind of a reversal from the previous 52-week high region, and the closing was not that great. But I have a simple rule for gap trades, is that doesn't matter how the candle looks. If I'm getting a low risk entry at the gap up, then I would take that and just see how brilliantly it moved the very next day. So this is kind of a luck, because although the sector was showing strength, but 20% kind of a move in a single day is just pure luck that you have to accept, right? So you can go through different sectors here. You can just go through different stocks. You can see the name of the different stocks, and you can see all the sectors. Like packaging films sector, this sector has been performing well from last 1 week and from last 1 month, although it was in a decline. we'll just take a look at one of the names from this sector. So overall, if you see over the long term, this sector is still in decline, but here you can clearly see that over the last 1 month, there have been volume coming in. Maybe it is at the point of a sectoral bottom from the fundamental viewpoint, or maybe it's going in the stage one consolidation where it might continue to consolidate for few more months and then finally break out from there. Similarly, if you look at defense was already in a very good upswing. And if you just go through the defense stocks, so I already have a watch list for this. So if I just show you the defense names, right? So you can clearly see how well they performed over last week. Just see how beautifully most of the stocks belonging to this sector gave a very strong move. You can clearly see. Let's look at these candles. And Paras Defense was an outliner. Just look at the move. 220% candles in just 2 days. Just look at how brilliantly it moved. And here it provided a really low risk entry. And many people were able to grab that opportunity, right? So that is the first step. You can just simply go through the sectors and see. And you can also use the ascending way, where you might be looking for sectors that are not performing well right now, but you might try to catch them at the bottom, or see if they are still consolidating, and then you might be able to catch them right over the because they have not been performing that well over the period of 1 month. So 1 month and 1 week really works well for me because I'm a swing trader, and plus I'm a trend trader. So I'm just looking at the stocks that are trending really well. You can also go through the 3 month, and if you have the paid subscription, you can also go through 6 month, 1 year, 2 year returns to see the overall strength of the sector. So this was the first step. And second step was understanding the market breadth, right? So even a strong sector won't make you much money if the overall market is very weak. For that, you need to be able to gauge the market breadth to see if the market is even favorable for short-term swing trading or not. So another really important thing is that you need to understand how the market breadth works, and how you can check the market breadth of the overall market to see if the environment itself is good for short-term trading or not. So if you see from last 2-3 days, the market has not been doing that well because in the short term we are kind of a bit heated. So this is a simple market breadth sheet, and I have made a separate video which I have given the link here. And for this dashboard, I have given the link. I'll give all these links in the description as well. Here you can go to this sheet, you can go to this video, you can gauge the market health. If I tell you a simple way to gauge the market health, is that just for the very short term, just go to this section, that is the percentage of stocks above the 20 days simple moving average. Here you can check the data point for last 375 days. So it's taking a little bit time to load. So here, as you can see, this is the data point for last 375 days, and how the stocks, like number of stocks above 20-day moving average, or below 20-day moving average. So this was the point where the bull run actually started by the end of the March 2023. And you see many times we have crossed this 80% level. So what I have observed over the long period is that whenever it crosses the 80% mark, there is some bit of pause in the market. As you can clearly see, it is above 80%, 84% or so. So what happens in such scenario is that there is a pause in the market, at least in the short term. I'm not predicting a crash or a down move of any sort of, but there's always a pause, and the stocks cool down, and you'll see this number will come down. And this has repeated earlier many times. You can see here in April 2023 this happened, and this number came down because the market corrected a bit, or at least the breadth was not that strong. Again in September the similar thing happened. Again in January 2024 similar thing happened, and in April again similar thing happened, and now a similar thing is again happening. Plus another way to look at it is that whenever it breaches the 20% mark on the downside, that is the point to blindly buy short-term ETFs, at least for the short term. That is your blind point to buy the ETF for the at least for the short term, because this is kind of an oversold uh, situation where it might stay for few days here. As you can see, it stayed from 13 March till 20th March for at least a week. It stayed there, but then you see eventually recovery came. Similar thing happened here. Similar thing happened on the day of uh, elections as well, election results as well, and now we are in the little bit heated environment. Selective stocks and selective sectors will continue to do well. As you can see, on Friday, the railway did really well. If you just look at the railway on Friday, if you were trading actively, then you must have seen many railway stocks gave a really nice move. You look at Titagarh Wagon, it gave a 5.8% move. Railtel was one of the leaders, and it gave a very clean breakout from the base and kind of reversed from its previous all-time high at 491. So any consolidation here might give good entry. And don't forget, any of the stocks that I'm discussing here is not a recommendation. I'm not registered. This is just an educational video. And coming back to the video, RVNL also gave a nice breakout. Rights was not that strong, but there's a good consolidation going on currently. Right, so this is the second step that you can do, is that understanding the market breadth. Third you have is reducing the scanning universe. So we have more than 7,000 stocks that are listed in the stock market, and it is nearly impossible to go through all of them. So we need a simple scanning criteria to shrink that overall universe. So you can make multiple scanners. I have given a link of few scanners here and a YouTube video as well explaining the scanner. So I've made few scanners that I use in the charting platform, right? There are a few bunch of scanners, and you can also create different scanners in TradingView itself. Now it has become very easy. So like these are the 4 primary scans that I use, which is stocks within the 30% range of their 52-week high. So here the criteria that I have, the price should be above the 21-day moving average, and the stock price should be within the range of 52-week high, 30% of 52-week high, and the 21-day moving average should be above 50, and the 10-day moving average should be above the 21-day moving average, which tells me that the stock is in good momentum. And here I've gotten many names, like, but you see your universe has shrunk from 7,000 stocks to 742 stocks. So this kind of a large scan you can do on weekly basis. On daily basis, you can look stocks, you can go through a gap scan, see how many stocks gapped up. It is a kind of a little bit flawed scan, because many times what happens is that the stock opens gap up, but it comes down during the day and it doesn't really capture that. Then you have a new 52-week high scan, which is a must kind of a scan for especially every beginner. Here you're just looking for the stocks that are at new, that have made a new 52-week high. And the last kind of scan that I use is the 4% scan, for which I have made an explanation video, and I have given the link of that scanner in that video as well. I'll also put this link of these scanners in this video as well, right? And the last thing after that you can do is just going through the setup specific. So last step is looking for that specific setup that you are comfortable to trade. It could be anything. It could be a VCP or simple horizontal line setup, or a base breakout or tightness setup, or pullbacks, or whatever you like to trade. For me, it's mostly the base breakouts, gaps, and inside bars, which I'm typically looking for a trade, right? So if I want to, let's say, if I'm just scanning few stocks and I want to just, let's take an example of this. So what I like to do is just, I'm scanning few stocks and I see that a stock is coming out of a range, a very small range like this. Here we had a clear resistance here, right? And the stock crossed it, because here it was a gap up, but it didn't sustain and the price came back. So again, this area was valid, and again it faced some resistance here, and now it went up from 10-day moving average. So these are the kind of setups that I'm looking for. Fact, I'll skip because there is no low risk entry point. This was the low risk entry point. And Suzlon Energy, I would like to skip again, because first of all, it's a circuit kind of a trade, and plus the risk reward is not really favorable at this point. So this way you can just go through different stocks and see if you find your setup that is to your liking or not. Again, in this case, on Friday it was a good low risk setup, right? So I was a bit late in this case, but again, I'm already holding some good stocks. GPIL, again, a gap setup here it was, and then it's moving up well. Railtel, you see, broke out on Saturday, sorry, Friday, right? You look at Newgen Software, again, nice base formation happening here. So this could be a a possible entry point above this level, because a clear base formation kind of happening here. You see Mapma India, it gave a really strong move. That too again was kind of a base breakout. So these are the kind of stocks where I'm looking for, like these are the kind of setups that I'm looking at, right? You see this was a clear base formation that was going on here, and then there was a very strong gap up. Although I would have missed it because at the breakout point it gapped up. Unless I was checking the gap scan, I might have missed it. But this is a simple way. You can go through the stocks and see if you find the setups that are to your liking. So this is a simple way to, like, simplify your screening process to select stocks for the next week and for the next month, and for swing trading at the short term kind of a trading. So I hope this video might have helped you in any way simplifying your screening process. And if you enjoyed the video, don't forget to like, subscribe and share as much as possible. Thank you everyone. I'll see you in the next one.